Thank you guys so much for your patience while we were trying to get all the technical issues out of the way. What we're going to do today, we're just kind of go over a couple things in terms of financial services and a little bit of education. We won't be long-winded. I know you guys have already been waiting for a long time, so I'll make it quick. But feel free to ask any questions that you may have at the end, okay? We'll start with the business overview. I mean, that's just pretty standard, just if we can just get everybody's undivided attention. And if you can, just kind of reserve your calls till after. I promise I won't keep you guys too long. Then if we can, I'll go ahead and go over the agenda. We're going to kind of discuss the problems with money and financial challenges that come along with it. And most of it is usually, it boils down to lack of education. We're going to go over the importance of emergency fund and how to start one. We're going to go over what short-term savings and long-term savings are. And also, we'll go over the types of life insurance, whole life versus term. We'll also go over the mutual funds, IRAs, 401ks. And then at the end, I've put, if you are sitting at a table and you have a worksheet, we can reserve that till later because it'll really help you understand and answer all of them once we actually go over this activity. We'll go over the activity together once we kind of go over this education. So it'll let me know how many people are actually paying attention. We'll start with the problem with money, which is going to be our next slide here. Money obviously is not the problem. I know a lot of people hear that root of all problem is money and all of that, but no, it's really just the lack of education. It really just doesn't come with an instruction manual. You know, a lot of things, like giving birth or having a child, you know, you got to figure it out. But we go to school, we are taught to, you know, get a job, get your education, get a job, get a career, but what do we do when we make that money? So we're kind of going to go over like everything that comes with, because really your paycheck that you're making, whether you're making minimum wage or if you're making 6 figures or 7 figures, it never actually came with a manual of how to spend it or what to do with it. So we're going to dive into that, okay? One of the things we're going to go over is why are people having so many financial challenges? Most people today, they really just don't have a financial education. And when I say financial education, I don't mean like where does, you know, how does the money, where does money come from in terms of like you have to get a job and you get it. No, it's like we're going to dive deep into what that actually means. We're going to go over having a financial game plan because when you're making your money, whether you're doing in a labor workforce or you're sitting behind a desk, you're working hard for your money. And you got to kind of find out what to do with that money and what's your game plan. And then we'll go over like having a financial professional and what that means, okay? Next one we're going to discuss is also investments. A lot of people probably are aware or know that, okay, you get a job, you have to start, especially us when we're coming as a diaspora, you open a checking account and a savings account and boom, that's the end, right? Then your savings account is supposed to really save you until retirement. But what they don't tell us is about what do we do with inflation? You know, or times of crisis. We just had a major one, you know, the pandemic. A lot of people lost their jobs and they don't really know what to do. A lot of people actually went through a financial crisis. Yes, some people had unemployment. Some people, and you see that was temporary. You know, some people used up their savings account because that's the only option that they had. So we're going to kind of go over investments and what that really means because, believe it or not, it's not just for the diaspora. As you can see here, about 25% of American workers have less than $10,000 in retirement savings. That's an alarming rate, and that's nearly 60% of Americans say they worry about more than running out of money in retirement than death. So that means when you're coming towards retirement, because remember, you're working, retirement isn't until you're 60, 65 years old, right? And at that time, you're supposed to really be living your life. But a lot of people are worried about what money do I have to live with? Because they don't have enough saved. So we're going to talk about what investments, how investment plays a role in this. We'll also talk about protection, which is income protection. A lot of people may or may not know what that is, but really income protection is life insurance. There are many different types of life insurance. Life insurance is not just there to help you when you die or leave something for your family. Yes, that's the main purpose of life insurance, but it plays many different roles, and that's what income protection is. So we're going to kind of discuss what that is, because as you can see, nearly half, almost 48% of Americans had no life insurance coverage in 2021. That's not in 1991, that's 2021, that's recent. Over 100 million households have no life insurance coverage at all, or have less coverage than they need. So we'll discuss the reason why people don't have or may have less coverage than they need is probably because they don't have a financial needs analysis or are speaking to a financial advisor, which is very critical because you can't guess how much you need. And you can't just honestly talk to a salesperson. You would think, yes, let me find me an agent, and I'm an agent, and it sounds like I'm talking against myself right now, but I'm gonna be honest, you really have to sit down and talk to someone that cares about your individual needs. It has to be a customized plan that works for your family, because what you're doing in your household or how much you're bringing in is different than your neighbor or the next person. So it can't be something that just like one thing that fits everybody, because it just doesn't work that way. And that's why some people are underinsured and they think they really have everything together to protect their families. So we'll talk about that. And then we'll talk about debt, because all of it ties into, really they all tie into one another. Debt, for example, the average American has about $90,460 in consumer debt. This isn't business, this is consumer debt. This includes credit cards, personal loans, mortgage loans, and my favorite, student loans. So student loans, obviously, for most people in America, is gonna be the primary reason that it's at $90,000, but it's still a debt. No matter what you do, you have to find out, how do we get out of debt? And it all comes with financial education, which is so important. 42% of US adults say they're gone deeper into debt during the pandemic. Clearly, we know why. That's when you're dipping into your savings or when you're losing your job, next thing you know, it's a domino effect. Now you're into debt because you're using more of your credit cards. You're borrowing more now. Some people have refinanced. Some people have lost their homes. And whether you're renting or it's a mortgage, actually right now, I can definitely say whether you're renting or not, renting is more than a mortgage for some people. Some people can probably have the right credit but don't have the right income, so they're not financially equipped to get into a mortgage. Or vice versa. You have the money, but your credit doesn't qualify. So you're forced to rent. And as you can see, a lot of people now with the age of not just renting, but a lot of people are turning their homes into, what do you call that? I heard somebody say it. Airbnb, thank you. Airbnbs, and that's affecting everyone, believe it or not. I love that the state of Georgia actually minimized it. They passed a law where you can only have 2 Airbnbs. I know some people were not happy about that because they were making a lot of money, but it really does tie into the economy and is very critical because a lot of people can't afford to rent. Their rent is going up because they know a lot of it is going into Airbnbs. People can't buy a house because everyone, again, it goes back to the Airbnb. So what do we do in that case? It's like we have to find out where we are and what we can do. Financial education or getting out of debt does not necessarily mean that you have to make more money. You can actually get out of debt with the amount of income that you're already bringing in. It's really about having financial discipline and, most importantly, the education. In terms of income, almost 4 in 10 Americans would have difficulty finding $1,000 for an emergency. $1,000. I will say, I know our people are really good at savings. So I know some people think, okay, this, we can't relate, but I will tell you this. It may not be you, especially our elders, but some of us are more Americanized, and we fall into the American way, and that means more spending. So we are American, and we may, this might apply to us. So this is why it's very critical that we start while we're young and we start doing things a little differently, because we're working really hard for our money. What we'll do is we're going to go ahead and talk about what we're really taught from our childhood. You're taught to do well in school. Check. I feel like we've done that. You go to college. Check. I feel like we've done that. Get a good job. We've done that. And you work for a good company. And you know what that equals? Your dream. That's the American dream. A lot of us, the reason why it doesn't work for most Americans, let alone, honestly, I can't even just say Americans, for us is because a lot of us have more than just one family to take care of, especially with the recent atrocities, what we're facing. We have multiple families because everyone back home is our family now. So this is even very, very crucial that we understand how money works and how we can go ahead and utilize this and how important financial education is. Because in order for us to help out as much as we can back home, we have to understand money. We have to understand what is it that we're doing wrong and how can we help our situation. Because I personally know a lot of people that are in a financial bind and they're struggling, because they're giving almost everything that they have back home. And I know people that are getting 2 or 3 jobs. So while we're doing that, we got to make sure also, because it takes a strain on our mental health, our physical health, we just have to be able to help each other mentally, or in my case, in the financial world, just with the education of what is it that we can do so we don't have to actually get 2, 3 jobs. What can we do with the one job that we already have? And it's really just having the proper tools to educate ourselves. Next, we'll talk about, of course, I know a lot of people hear that if you don't plan to fail, you fail the plan, right? All that means is just that you can go like a robot, go to work every day, you have to take care of things and come back home, eat, repeat, do the same thing, rinse and repeat. But we have to plan, for our retirement. Whether you're American or not, you still have to plan something so that way there is no surprise. I know you see, like when you go to Walmart, you see the Walmart greeters. I don't think they want to be there at 65 or 70 years old, greeting, standing on their feet all day. But it's because they didn't have a financial plan, unfortunately. And they know that Social Security is not enough. A lot of them do get Social Security, but what happens is, what I call the sad American diet, is it comes with a lot of health risks. And so as we get older, we're going to have health issues. And if we're going to do that, that Social Security check or that 401k that you have is not going to be enough. So we don't want to be another Walmart greeter. No offense to them. They're doing what they can. But that's because they didn't plan anything, or they failed to plan, or they didn't have that proper education. So what we're trying to do is to avoid that and find a way to do that. One of the best ways to do that is you have to have a financial needs analysis. And that's just having someone, a financial coach, a financial advisor, really educate you on your needs. Like I said earlier, some people have less life insurance than they need. Some people actually have more than what they need, believe it or not. So it's like, what am I doing wrong? You don't also want to overspend your monthly premium. If you do have life insurance, that's awesome, great, you already took the initial step, but you want to make sure you have the right type. You want to make sure that you're not overpaying for something that doesn't even suit your family. So it's having that plan, having a financial needs analysis. You can only get that when you're speaking to someone that truly understands your needs. That's what's called a financial needs analysis. Your needs might be different than my needs, and it's definitely going to be different than your American neighbor's needs. So what we want to do is definitely get in touch with someone that is a financial advisor, and make sure that person is giving you eye contact, by the way, and make sure that person is asking you questions. Make sure that person is interested in you and helping you and not just your money. Because that's really how you know that someone really cares about helping you and making sure they're giving you the proper education. What I always tell people is if you are speaking to someone, whether they're at the bank or whether it's a standalone office, Ask as many questions. Please don't be afraid to ask. This is your money that you worked so hard for. So always make sure that you're asking questions and make sure that they are comfortably answering everything, even if they have to repeat it. Because you, believe it or not, when you're sitting at somebody's desk, you are the boss. They work for you. They can't make money without you. So they might as well, you might as well just ask them every question that you have. Next we'll talk about is this, why so many fail when it comes to their finances. I think most people conform, and what I mean by conform is, like when you're going to school or, whether you're in college or you have the same group of friends, or you go work for a company, you're doing the same job, right? If you're one department, if you're in accounting or if you're in finance or engineering, right? You're doing the same thing, and sometimes we're not doing something individually or something that's going to help us progress individually. So we tend to conform and we tend to follow someone that maybe was our supervisor or our trainer. But just remember, they have different dreams or financial dreams than you do. So what you want to do is always ask questions, because not everything was taught in the textbooks. It definitely wasn't taught in my school. High school, college. I've been here since elementary. I was in this country and I started at 4th grade. And I didn't learn everything that I learned in order for me to become financially free until I was in my late 20s, out of college. So this is why we have to, and I really wish that they did teach a lot of this in school, especially in college, since we pay for it. It's not free. But that's just not the case. So always seek out for answers that are going to be pertaining to your needs. Because remember, you're an individual that might need something that's different than your sibling. I have a sister that loves sales. I have another one that loves a restaurant, just working in the service industry. Everyone's different. We don't have to all do the same thing. I remember my mom wanted all of us to be doctors, but that didn't happen. But the point is, you have to be happy with what you do, and you have to make sure that you're passionate, but also don't be afraid to just kind of merge out of that and look for something else that makes you happy. You don't have to conform and say, oh, I already did this for so many years, so I'm going to stick with it. Because what comes with that is misery, and you definitely don't want to hate your job and find something new 10 years later and said, I wish I started sooner. We'll talk about different types of accounts that you'll need, and this is just the basic, okay? So a lot of people don't know that you really just need to start off with, the basics are going to be your emergency fund and your short-term savings and your long-term savings or investments. Emergency funds, I'll go over that. Emergency funds can be something that you save, in a savings account. You open a separate account for unexpected life events like car repairs, medical bills. And make sure your short-term or emergency funds is something that you would say you've saved enough that, God forbid, if you lose your job or something like the pandemic, that you have at least enough to survive off for the next 6 to 12 months. That would be considered like your emergency funds. Because there are people that have already done this, and they were okay during the pandemic. And they've already had the financial plan. So when something like the pandemic happens, it won't affect you because you've already planned ahead of time. So that would be like the emergency fund. Short-term investments, now you could do like certificate of deposits or CDs, money market accounts. Those would be considered like your short-term. You can do that, of course, with any one of your banks. Now that's something, God forbid, you run out of your emergency fund, at least you know you have that, right? Because you want to make sure you save the last, which is long-term investments. You want to be in a position where you don't touch that at all. What I mean by that is you want to make sure that you look forward to that towards retirement. Because what happens with long-term investments, most of them, like mutual funds, for example, they'll have what's called compound interest. And we all need to be at a position where we have some type of investment vehicle that has compound interest. Compound interest is just interest that's growing on top of interest. So let's just say you're already paying your monthly principal and then it's growing interest, right? Like a short-term investment, like a CD or money market. But when you have something like a mutual fund, a long-term investment, now it's going to grow compound interest. So over time, that interest is going to accrue interest. So it's almost like literally you're letting your money work for you. So while you're going to work until your retirement, imagine that you have your money going to work for you until retirement. It's literally having two of you going to work. So that's how I like to look at it when I discuss anything that has compound interest, because that's something that's really not discussed in our community. We discuss, I think the biggest thing I've seen that my mom had was a money market or a CD. You know, you don't touch it for 6 months to a year, and it has a little bit of interest, and oh my goodness, we got a little money going. But that's really not it. That's not what's going to get you towards your retirement. That's still going to be some of what's called the short-term investment. So we definitely want to always look into, like I said, the long-term investments, because that's something that we don't have to look forward to a Social Security. Honestly, we don't even know, I don't know if you guys see, but we don't even know the future of Social Security. That may be obsolete, you know, in the next 10 years. Even though I know when you get your paychecks, you know, you see the first thing, FICA, you're going to see your federal income tax withheld. You see Social Security, you see Medicare. Yeah, that's mandatory. We have no choice but to have that deducted of our paychecks. But we honestly don't even know, with everything going on right now, with this economy, we don't know if we're going to have Social Security. So that's just a wake-up call for people that think, oh, okay, you know, when I'm 65, I have my Social Security to look forward to. You know, unfortunately, people are going to find out the hard way, and that goes back to if you plan to fail, you fail to plan. So you got to want to make sure that your assets are protected. You want to make sure you look for a long-term investment. Okay, so basically you're taking control of your money. That's all we're trying to do. Mutual fund. Mutual fund is basically an opportunity for you, together with like many other investors, to pull your money. Okay, and the way it works is just you have individual investors, they pull their assets, and then it goes into the global economy. The reason why I discuss and highlight mutual fund is because it's less riskier than you putting your money basically in one pot. You know, like when you're choose some type of stock and you're putting it in there, but when you're doing it in a mutual fund, it's pulled assets in different amounts. So it's less risky, and it's something that, you know, I think would benefit our community for sure. If you are the type that, you know, loves to take that risk and you know, want to do other stocks, that's great, do your research. But I'm just saying, for people that are going from a savings account that's never looked into an actual form of investment, you want to start with something that's less risky. We also want to discuss the rule of 72. Now, rule of 72, like I said, there's so many different types of investments, whether it's the money market, CD, whether it's different types of stocks. You want to know, like when I put my money in there, and let's just say I said, how long is it going to take for this money to double? Well, the rule of 72, if you've never heard of it, all it is you divide that interest. Let's say if it's 3% or 6%, you're just going to divide that into 72 to find out exactly how many years it's going to take for your money to double. So if you had something, for example, that's at 6% interest, as you can see here, and let's say you put $10,000 in there. If you see on this on the screen, I'm hoping it's on the screen. Okay. If you see it on the screen, basically, if you're putting it in an investment vehicle that's basically growing in a rate of return, which is your interest at 6%, it'll take you about 12 years for that $10,000 to double to 20. Imagine if you're putting it in an investment vehicle that's growing at 12%. That $10,000 in 6 years will be doubling to 20. So that's basically anytime you're putting your money in any type of investment tool, all you have to do, whatever it is that you have it in, look at the percentage. Divide that by 72, and you'll know, like, oh, okay, so I know by year such and such, my money's going to double. Hopefully this gives you kind of an idea of what the rule of 72 is. The reason why I discussed the rule of 72 is because everybody wants to know. I mean, it's not a guessing game. You want to know basically where you stand 10 years from now. You know, I mean, with the global market, of course, everything is going to be up and down, but having an idea kind of set you up for success, and you'll know how to plan better with everything else around you. We always want to discuss about paying yourself first. And I don't mean paying yourself like when you get your paycheck, you pay your bills and you have, oh, okay, now I have shopping money. I'm going to Neiman Marcus or I'm going, No, I mean pay yourself first in a form of investing. Because remember, you don't want to work forever. Some of us want to retire early. But it's not going to be before 65 if you don't have anything set aside for yourself. So whether, again, you're starting a small job or this is straight out of college or you're already in your career work field, you just got to make sure that you're always putting money to pay yourself first and just never touch that. And that's always going to be in a form of long-term investment because remember, we want to go to that compound interest. Income protection, I know I told you what income protection is, which is life insurance. A lot of people, I'm pretty sure, heard of life insurance or may have life insurance. I just want to know, how many people here, by show of hands, have life insurance? Wow, okay. Appreciate your honesty. And kudos to you guys for having it. And that's okay for the ones that don't. Thank you for coming here. That's why you're here. So life insurance, basically, to put it in simple form, it's protecting your income, right? Here we use the toaster analogy, and all it means is that what if you had your toaster in the kitchen, and on the 1st and 15th, because most people get paid twice a month, right? You are getting, every month you're getting about $2,000 popped out of your toaster. Mind you, you're the toaster because you're making about $2,000, let's just say, every 2 weeks. What would you do with that toaster? Would you insure it to make sure you never lose that toaster? You would have some form of insurance on it, right? So it's like, why don't you have life insurance on yourself? Because you are the one that's making that money. Whether it's through sweat, whether it's through long hours staring at a computer, either way, it's affecting your health. It's affecting your time. It's taking your time. So it's your money that you went to school for. You got to this far to make this money, but if you're not insuring it, what happens, God forbid, because we all die at some point. And I know it was taboo because, believe it or not, it was so hard to get my mom to get life insurance. It was a struggle, and it wasn't actually until one of her friends convinced her. Not her daughter, her friends. Because she was like, oh, yeah, Rahwa always talks to me about that, I don't know why she said. And I was like, Mom, I'm right here. You're talking about me to your friends. I'm right here. And she was like, Goaz, why aren't you listening to your daughter? Like, she knows about that? You have somebody in your home that's educating you and you don't have it? And it's just like, I don't know what it is about not listening to your kids, but you listen to your friends. I'm pretty sure I'm not the only one that ever went through that, but I'm thankful to that friend. Because once my mom had it, I did feel better, of course. Nobody wants to be a burden or, when you lose your loved ones, you're already going through so much hurt and pain and everything, and you have to worry about the struggle and the stress of how to even bury them. That's just too much for anyone, for any burden, and especially if you're leaving behind, let's just say you're paying a mortgage. And if somebody passes away and it's the breadwinner of the family, what do you think that bank is going to say? If you tell them, you answer, my loved one is not here, they were paying the mortgage, but they're no longer here. Well, sorry for your loss, but we still need that bill. We need it paid. They don't care. I personally, now I'm originally from St. Louis, Missouri, and I recently moved to Atlanta about 4 years ago. I guess I'm officially an Atlanta now, right? Okay, so, but in St. Louis, I've seen so many people lose their homes, and it was heartbreaking. Some of them were from the Middle East. Because I speak Arabic, I had a lot of Middle Eastern clients, especially truck drivers. I've seen people that literally lost their homes. And they're always on the road, they're working hard, they're making this great money, and some of them own so many trucking companies, but they're also truck drivers themselves, and some lost their lives on the road. And unfortunately, because they're gone so long, the mom isn't working. The mom and kids are at home, but she has no backup plan because she was just relying on him. And so She had to move and apply for Section 8, move with some family members until she can get her Section 8, and that's just really, really heartbreaking to see, especially people that I know that went through it. It's one thing when you hear about it from somebody random, but when you hear something like this happen to someone that you know, it really does affect you, and it makes you become passionate about talking about this, because it's something that can literally happen to any one of us, especially if we're not bringing in a two-income household. This really does affect us. Most cases, we do need two incomes nowadays, to run a household. But we all know our birthdays, right? Nobody knows our death date. So this is another reason why we need to make sure that we protect our income, we protect ourselves, because if anything, you want to make sure you have something in plan, because we don't even know what God's plan is for us. And I'm not trying to scare anybody or, this is just education that we can't avoid. I know a lot of people always say, this isn't something they want to talk about, or we have time, but we really don't know how much time we have. So it's always best, like they say, better safe than sorry. Another thing I want to talk about is the different types of life insurance. So you have options, right? And I'll just briefly talk about it. There's cash value, of course, life insurance. Those are going to be ones that are like whole life, universal, variable. All that means is that you are paying for a death benefit, but it's also attached with an investment component, okay? So that means you're making one monthly premium, right? And with that monthly premium, it's split two ways. How it's split, we don't really control it, like when we have a whole life, because you're just making a premium, and based on your health and your age, the insurance company, they have their own algorithm, right? They'll determine how much of that will go towards your investment. So I know, especially if you're on social media a lot, there's this huge hype about IULs, Index Universal Life, Whole Life. I'm not saying anything against them, but I'm just saying that we have to educate ourselves on how they work. And not everything, again, is one thing that fits everybody. So you have to see if this is the right thing for you. This is why it's so important to talk to someone. If you see it here on your screen, life insurance, the two options here. If you see, for example, I'll talk about my story. So I had whole life insurance for about 6 years before I became a life insurance agent. And I had it through a company, Northwestern Mutual. Loved the company, nothing against them, okay? I had it through that company. Now I was paying, and I was proud of my whole life policy, okay? But I didn't understand it much. And honestly, my life insurance agent was very nice, but she was nice because of seeing my office and everything else. She wasn't really understanding me. She pretty much picked out everything for me in terms of what I needed. And that's really what makes me look at everything differently, because I don't need someone to tell me what my budget is, because I'm the one paying the bills. She's not paying my bills, right? So I needed someone that listens to me in terms of what my budget is. And it took me 6 years to realize I was overpaying for an overpriced policy that wasn't for me. And it was just because, hey, she's professional. She came in, with the nice suit. Actually, one of my best friends, Saba, joined as a life insurance agent, and she was mentoring her. And I really just did it for her, to be honest. Not the best reason to have life insurance, but I did it to help a friend out. And you know how you want to help your friends succeed in their business or whatever they're doing. And I just said, why not? Sign me up. But then I realized, hey, this is more than just helping a friend out. This is actually my future, my kids' future, and I had to look at things differently, but it took me 6 years to do that. I can't take back that 6 years or that money that I lost. All I can do is just move forward and educate everybody else. So what I want everybody to do is look at the ones that do have a policy. Look at their policy. If you don't understand it, I'll be happy to go over it with you. Just look at the summary. It really does give you all the details. Most people, when they sign up, they don't look at page 4, 5, 6, or page 10 or 20, because sometimes it's a thick package, right? All you're doing is just looking at your policy, what they told you, you signed, okay, great, I'm good. There are so many different exclusions and stipulations in there and clauses, hidden clauses in different types of life insurance. I'm not here to sell you life insurance. I'm here to just educate you on what it is that you already may have or what it is that might fit your needs. I won't know your needs until we do a financial needs analysis because I think that's very important. Like I said, everyone here comes from different backgrounds as far as financially and what they have as far as their plans for their future. So knowing exactly what it is that you have is so important. We'll skip over to the last slide where it says the theory of decreasing responsibility. One of the ways that we help people to let them know not to overspend on life insurance is really just knowing that, one, let's just say when you first get life insurance, maybe you have some little ones, you know? Maybe you have an 8-year-old, a 10-year-old, and God forbid if something happens, you want to make sure you have enough, of course, to cover your mortgage. So this is how most people determine how much life insurance they need. They look to see if they're paying rent or a mortgage. They look to see if their kids, they need money left behind to make sure that they're going to a good university, right? They want to make sure that their income, whatever they're bringing in, whether it's $2,000 a month, $3,000 a month, that if something happens to them, that money can still come in for the next 10 years. Now, the theory of decreasing responsibility, the way that works is when you get older, let's say 20 years from now or 30 years from now, your kids are adults. Most of them are going to be out of college, starting their own lives, right? Start their career. So do you still need $300,000 or $400,000 and $500,000 or $1 million in policy? Maybe your mortgage is paid. Your kids, you don't need to leave money back for their education anymore, right? So this is when we discuss with people that what you had in the beginning may not be something that you still need. So one way for you to save money and maybe put that towards your investment is throughout your life, when things change, your kids are grown, they're out of college, or your financial needs are not the same anymore, you want to go ahead and change that. And you want to be able to talk to someone that's able to educate you on how you can do that. So if you are paying $300 a month, for the first 10 years or 20 years, you don't really have to pay that. You can now pay maybe $50 a month. Because the ultimate goal is we don't want to be a burden when we do pass. And we want to make sure that our kids are okay, but when they're adults, we want to make sure that we don't want to be a burden in terms of like burial costs or anything like that. I mean, we live in America, and bereavement days is like, 3 days? I don't even know if did they even increase it? I haven't had a job in forever, so I don't know. But it's typically 3 days, right? Nobody's ready to go home or go back to work after 3 days, of mourning your loved ones. So you want to make sure also that when you are picking out a life insurance, that it's something that gives you a little bit of cushion so that way you can stay away and properly grieve. In terms of life insurance and everything, that's pretty much all I have in financial services. I left you guys, and I'm not sure, I know some people came in afterwards. There are sheets and worksheets as far as puzzles that are on your desks. And I think I have, can you do me a favor? There's some pens there. Sorry, I don't think I left any pens at your desks. Do me a favor. There's some pens in that office as well. Yeah. If you do have a pen already, you can go ahead and get started. And we're going to start with the puzzle. We just want to see how much of you have been paying attention or how easy or how hard these terms may or may not have been. And it's okay if you don't get them all. You can guess. And I'll be able to give you guys the answers also in a second. Now, what I'm going to do for the sake of time, because we did get started later, I'm going to go ahead and read the first one. And I just want to know, you could raise your hand or anybody to shout out the answer, what you think it is, okay? We'll start with, let's see, everybody has. Okay, looks like everybody has a pen. If you don't, you can raise your hand. Mabrat's coming around with a pen. So number 3 across, it says, a price or amount paid periodically for protection from a risk or loss. And you can guess, so that's 3 across. So this is, again, a price or amount paid periodically for protection from a risk or loss. All right, so we're going to keep it across. So we're going to go to number 4 across. A prediction of your credit behavior based on information from your credit report. A prediction of your credit behavior based on information from your credit report. What do you guys think that is? Credit score, that is correct. Okay, I see that table's doing something. All right, next one. An individual retirement account that offers tax-free withdrawals in retirement. To be fair, I didn't go over that with you guys, so I should have done that. So there are 2 types. I'll give you guys some clues, okay? There are 2 types, and they're both called IRAs. Individual retirement accounts. There's 2 kinds. Oh, there you go. I heard it. Roth IRA. Yes. Roth IRA. Tax-free withdrawals. So that's the one where when you are withdrawn, there is no tax penalty. That's the Roth IRA. And that was 8 across. Number 9. This is used to buy a home or to borrow against the value of a home you already own. I heard it. I think I heard it back there. Say it again. Close, not equity. Mortgage, yep. Hand in hand, good job. Okay, so I discussed this a lot. What is another term for income protection? Income protection. What do you guys think that is? Yes, it is, life insurance. Remember, life insurance, you're protecting your income. All right, so we got number 12 across. So they pulled collection of assets that invest in stocks, bonds, and other securities. So this is actually a typo, but it's a pool of collection of assets that invest in stocks, bonds, and other securities. So that's a mutual fund. Did somebody say mutual fund? That's what I heard over there, okay. Mutual fund. So basically, mutual fund, it's not you investing in one type of stock. It's going to be multiple different stocks, bonds, and securities. That's the reason why it's a low risk, because it's not putting all your eggs in one basket. All right, 13 across. Money set aside for unplanned expenses and financial emergencies. 13 across. Money set aside for unplanned expenses and financial emergencies. Emergency fund, yay! First thing we went through. All right, so we're going to go down. Look at the ones going down. So simply put, this is the reward for saving and the cost of borrowing. So going 1 down, the reward for saving, what do you get? And when you're borrowing, what do you have to pay? Interest, that's right. Look at all these financial literate folks. I love this. Okay. Here's one. Interest you earn on the initial principal plus on the interest that accumulates over time. So this is the one when I was saying interest on top of interest. Going down, that's 2 going down. What is that called? Compound interest, that's right. That's the one we want, compound interest. So the goal is to make sure everyone sets an account at some point in their life where they have compound interest. That's where your money is growing for you, basically going to work for you. All right, we got like 4 more. 5 going down, a type of individual retirement account that lets your earnings grow tax deferred. Which one? I think I heard it, I'm not sure. So remember, we had 2 different IRAs, right? We used the Roth. What's the other one that you get through your job? It's like a 401k. Traditional Roth is the traditional IRA. Similar, so you know what? You're close. Traditional IRA. Okay, somebody's paying attention. All right, we got 3 more. A process to determine the amount and type of life insurance to cover an individual or a family's needs. Now, we use the acronym because it is a 3-letter word, and it's a long one, so we just use the acronym for this one. So this is when you have to determine what it is that you need as far as an individual or a family. I'll give you this one. It's financial needs analysis. Because it's so long, we're going to go with FNA. All right, 2 more. 7 down. This is calculated as a percent of the principal. So this is calculated as the percent of the principal. I think we already said, did we already say this one? I feel like we did. Percent of the principal, so it's interest. I might have already, I'm not sure if I gave you guys that one already. Okay, no we didn't. Last one, this is a way to manage your risk. Which one? It's a way to manage your risk. Remember, we have this on our car, we have it on our home, and we discussed it now. This is a way to manage your risk. What is it that you need for that? Insurance, that's right. Give you guys, you know what, give a hand applause. Everybody did really good. And that concludes the financial literacy. If you guys have any questions, I'll be over there in the back. But thank you so much for coming, and thank you for engaging in this activity. I hope you learned something.
Thank you, everybody, for joining this valuable financial health workshop. And a special thank you to Rahwa for sharing her financial health insights. Let's please give her a hand. As we close out this session, please go outside to get brunch from the food trucks. And then once you have your food, there will be vendors that are located in the back. Please join them. And also there's a mimosa bar that will be open till 3 p.m. So please go there after we close out. Thank you again, everybody.
Maybe I just can't stop, I'm on my